and Company's nonprofit university. We have these trainings prepared to share some basic knowledge on the nonprofit industry and specifically some accounting concepts in the nonprofit industry. We have a series of trainings that we have put together. So today we are going to cover just the nonprofit industry background. And what we want to cover here, just some topics of what does it mean to be a nonprofit, what tax exempt status is, and discuss a little bit about that. Nonprofit governance, programs, common differences in nonprofit organizations from for-profit organizations, and then how to address any or how to contact us if you have any questions related to this training. So first of all, let's go through what does it mean to be a nonprofit organization. So as far as what it means to be a nonprofit organization, it's important to know that nonprofit organizations are mission-driven organizations. They are primarily started to address or fill a societal need that can't be met by the government, or the government is electing not to meet that need, or is not met through a for-profit entity. And so usually that need is part of the nonprofit's mission. Nonprofits receive in different levels of degrees contributions from resource providers who do not expect commensurate value in return. So that is something that is pretty unique to nonprofit organizations. For-profit organizations typically receive money for something that they're providing to their customer. Even government entities, they receive taxes and other things, and those paying taxes expect something in return from the government. Whereas nonprofits really do have that unique aspect of the charitable piece of donors are willing to provide money to these nonprofits in the hope that the nonprofit will use that money to benefit others or fulfill their mission. So nonprofits, they're typically referred to as charitable organizations or charities, and that is mostly due to the nature of contributions. Okay, and in the nonprofit, it's typically classified into 8 major categories. There's the arts, cultural, and humanities. There's education, environmental and animals, health services, human services, international and foreign affairs, public and societal benefit, and religion. So most nonprofits will fall into one of these 8 major categories. One thing that's unique with nonprofits is they do have an inherent need for financial expertise. So donors who support nonprofits, they're increasingly savvy. So operational transparency and reliability in financial reporting is really vital to maintaining donor and public faith, trust, and support in that nonprofit. So nonprofits do have a strong demand for CPAs, just because of the knowledge and skills and abilities of the executives typically do not have that knowledge. So typically a nonprofit organization will be founded by an individual who has a strong desire to fill that need or mission that the nonprofit is founded for. And so they're very focused on being able to fulfill that mission. And so they don't necessarily have the skills of skills or background related to financials and financial reporting. And so they typically have that need for CPAs, for the accounting background, in order to compensate for the skills that they do have. So the skills they typically have are more likely aligned with the mission of the organization they work for. All right, let's talk a little bit about tax exempt status. So there are about, well, I guess there are more than 20 different tax exempt status classifications. The most common are going to be the 501c3s, which are the public charities, the 501c4s, the 501c6s, and the 501c7s. So 501c4s are typically civic leagues, social welfare organizations, or local associations of employees. 501c6s are business leagues, chambers of commerce, real estate boards, other membership type organizations. And then 501c7s are societal and recreational clubs. And so it is important to know that the only ones where contributions by a donor are tax deductible to that donor are 501c1s, 501c3s, 501c8s, and 501c13s. And then also to be tax exempt under Section 501c3 of the IRC, an organization must be organized and operated exclusively for the exempt purposes that is set forth in that section. And it must not be organized or operated for the benefit of private interests. So that, kind of meets the definition of a public charity, meaning it's for the public, it's to benefit the public, and it's not to benefit or I guess to benefit a private individual or a private group of individuals. But other sections allow for that. So for example, the 501c6, where there's a membership organization, the benefits of that organization it's okay for those to be going to a specific membership organization. But along those lines, that 501c6, the donors are not going to be able to receive a tax deduction for the funds going into that organization. Yeah, another thing too is just the term charitable. It is often used in its generally accepted legal sense. It includes the relief of the poor, the distressed or underprivileged, the advancement of religion, the advancement of education or science, building or maintaining public buildings, monuments, or works, and lessening the burden of government, lessening neighborhood tensions, eliminating prejudice and discrimination, defending human and civil rights secured by law, and combating community deterioration and juvenile delinquency. So that's kind of like a high level definition of kind of charitable, and what kind of the legal purpose or legal things that a charitable organization can do. All right, so let's talk a little bit about obtaining tax exempt status. So the benefits of having the tax exempt status, it includes exemption from federal income tax, and then the eligibility of receiving tax deductible charitable contributions. So to qualify for these benefits, organizations are required to file an application with the IRS, and then the IRS has to officially recognize that organization as tax exempt. And it is also important to note that when the IRS approves a timely filed exemption application, the exempt status is recognized back to the date that that organization was created. So while an application is pending, the organization can treat itself as exempt from federal income tax because the IRS does recognize it back to the start date. So it is okay to follow that practice. Another thing too to just emphasize here is so that the two benefits of the exemption from federal income tax and the deductible charitable contributions, as I mentioned before. So all the 501c3s, once they're approved and receive the approval from the IRS, they are exempt from the federal income tax. However, only those that we discussed earlier, the 501c3s, 8s, 13s, I believe, those are the ones that qualify for deductible charitable contributions. So it is important to remember that that just because a nonprofit is a nonprofit and approved by the IRS doesn't mean that the money going in is always tax deductible to the contributor. It does have to be a specific type of nonprofit organization. Okay, and then another thing, so once you've obtained that tax exempt status, you do need to also do some things to retain that tax exempt status. So a new 501c3 organization, it will be classified as a public charity for its first 5 years if that organization can show it can reasonably expect to be publicly supported, regardless of the public support received during that 5-year period. So to kind of clarify that, you know, a new nonprofit could receive this public charity status. But then the first couple of years, they may be heavily supported by a private individual or foundation or group just to help them get going and get, get the funding they need to continue and to be an ongoing nonprofit organization. So within that first 5-year period, they may be receiving a portion of their contributions from, those private sources. But they do need to show that they'll be able to, or it's reasonably expected that they'll be able to be publicly supported after that 5-year period. So the IRS does monitor an organization's public charity status after the first 5 years. They use the information in the 990. So based on the public information or the public support information reported in that 990. So beginning with the organization's 6th year and all the following years, there's this public support test. So if an organization is meeting this public support test, it's able to remain a public charity for that year and the next tax year. If it does ever fail that public support test, there's a chance that they could lose that the public charity status. So it's important to keep that in mind. Another thing too that related to tax exempt status is that a common misperception is that nonprofits are exempt from all taxes, but that is not the case. So if a nonprofit does generate income from a business activity that is not related to its exempt mission, it will likely need to pay tax on that income. There are certain thresholds that if you're under that threshold, you don't need to worry about it. But once you exceed that threshold, you do need to start paying federal taxes on that type of income. Also, some nonprofits are liable for sales and use taxes and property taxes within the state and local jurisdiction. So you are not exempt from those type of taxes either. And then, furthermore, so that if the organization has employees, a nonprofit is responsible for employment taxes as well. So federal and state income tax withholdings and federal and state unemployment taxes. So you do need to remember that, tax exempt status isn't inclusive of all taxes. It's considering the federal income tax and state income taxes. Those are the taxes that they're exempt from. And so, it's also important to note that there aren't penalties for these types of earnings. So if you do have income from a non-related business activity, that's okay. That's not a problem. It's just a matter of you need to be paying taxes on that activity. And your tax rate is not going to be any higher than a for-profit entity. You would just follow the tax rate based off of your level of income and those type of things. So just important to keep those things in mind. Another thing that's unique to nonprofits is just the governance aspect of a nonprofit organization. So in most organizations, the governance of the nonprofit is a shared responsibility between the executive management and the governing board. So it's important to have an active and engaged board in order to have a successful nonprofit organization. So you do want to make sure you have a board that's composed of persons who are informed and active in overseeing the operations and the finances of the nonprofit. So to help guard against misuse of the charitable assets, the board should include independent members and should not be dominated by employees or others who are not independent because of work or family relationships. A lot of times, newer nonprofits boards will be composed of these will be composed of these non-independent type individuals, whether it's employees of the organization or family members of the founder or executive director. And so it's important to when you are a public charity to make sure that you do have a board that's composed of independent individuals. So people who have an outside perspective and are not related or are influenced by others within the organization. And it's also important to know that the responsibility, it is the board's responsibility to hire and set the compensation for the chief executive, whether that be the executive director or the president of the nonprofit. And so it's important. It's an important role just because the executive director, their ability to achieve the mission, implement strategies and those type of things, it's just important to have the right individual in place. And so that is a key aspect of board governance. Okay, it's also very important with the board just to make sure you have a defined role of the board, just because like mentioned already, the board does play an important role in overseeing the activities of management. But it's also, the board does provide a lot of support to management a lot of times. And so it's important to make sure that the board roles and management's roles are defined so that they're not duplicating any efforts, if that makes sense. Also, an important responsibility of the board is to set and oversee the implementation of strategic objectives. So the strategic objectives are typically specific and measurable goals that the organization plans to achieve while carrying out its mission. So there are some examples of strategic objectives. The strategic objectives are not the mission, they're not the programs, but they're the goals that help the organization achieve those. So like some examples of those are, if you're a homeless, if you're an organization organized to help the homeless community, a strategic objective could be reducing homelessness within a city by 10% within the next 2 years. So something that's specific and can be measured. Another one would be providing school supplies to 100% of elementary school students in a specific school district for 5 consecutive years. So that, of course, would be, an educational related nonprofit. That's kind of an objective that they could have that is specific and also measurable. And so it is an important role of the board to kind of set those objectives and help guide management, to help them know, some ways that they can be achieving that. And it's important to, work with management in setting these as well, not just kind of saying, hey, you're going to do this, management, but working with them to help come up with these objectives together. All right, let's talk a little bit about programs within an organization. So nonprofits have the programs. So they're founded to provide a certain public benefit. And this is often done by breaking down the mission of the organization into specific programs. Expenses for each of these programs are then broken out into program services and supporting services. And the program services are the costs directly associated with the program. So for example, those would be if you have a research program, the specific costs incurred to research whatever is being researched. The supporting services include costs for board governance and oversight, internal or external audits being performed, general infrastructure, and fundraising expenses. So it is important to remember that nonprofits do have general and administrative expenses that are not specifically tied to the program and the mission of the organization, but are expenses that are required to operate the nonprofit. But it's specifically operating the nonprofit, not specifically addressing the mission in the program. So yes, you do need those expenses in order to do your programs and fulfill your mission, but those expenses are not directly impacting it, if that makes sense. So most organizations will provide services for several separate and identifiable programs, and the expenses of those programs should be disaggregated and reported in the financial statements that way. So you can, I guess, for financial statement reporting, you can include your different programs in your statement of activities, or you can disclose those in the notes. But it is also important to make sure you have those programs defined and what they're doing. And it's important in the financial statements. So, the goal of the financial statements or financial reporting is to report meaningful information about the costs of the organization's service efforts. So a lot of the financial reporting should be showing, okay, which costs are going into which programs, and how are those costs, benefiting and fulfilling the organization. All right, let's talk a little bit about some common differences in nonprofit organizations. A lot of times people will hear the term a nonprofit organization and they will think, oh, that's a nonprofit organization that doesn't make money. So it is very important to think and remember that a nonprofit does not mean the organization cannot make money. A healthy nonprofit makes money. So what a nonprofit means is it really just means that any excess of revenues over expenses should be used to conduct the activities of the organization and not to enrich a private party. So any earnings, so any revenues, contributions over expenses, those are retained within the organization to use in the future to fulfill the organization's mission and purpose. So that's the biggest difference. A for-profit entity is created to benefit the owners of the company. Nonprofits are formed to benefit the benefactors of the mission and the programs. Okay, so from an accounting perspective, so the Financial Accounting Standards Board, they have their glossary and definitions in the accounting standards, and they've identified 3 major characteristics of a not-for-profit entity. And it's important to remember that these characteristics can be present in an organization in varying degrees. And a nonprofit does not have to have all 3. So like one example is a nonprofit school may not receive any contributions, but they will rely on fees charged to students for its revenues. They could get contributions, but they don't need to have them as tuition for the school, could help cover their expenses, but they could still be a nonprofit organization. So these are the three characteristics that the FASB has identified. The first one is contributions. So we've already mentioned that a little bit. Contributions are unique to nonprofit organizations in that the donor does not expect value in return for their donation. You know, they may receive something, but it's not at equal value or commensurate value. The other unique aspect is operating purpose. So the typical purpose of for-profit entities is owner profit, like we mentioned previously, but the nonprofit organization seeks to benefit others. And then the third thing is the absence of commercial ownership interest. So nonprofits typically do not have owners, and there's no distributions of earnings to owners. So any earnings have to be maintained within the nonprofit organization. Okay. So here's a couple of other differences. Some of them, you know, the first one's the same. So the contributions. So for-profit entities do not have contributions. But the thing about contributions is contributions does include cash contributions, non-cash contributions, and in-kind contributions. So the in-kind contributions are contributions of non-financial assets. Could be services, could be property and equipment, could be other things. Another common difference with nonprofits is promises to give. So promises to give are directly tied with contributions as well. A promise to give is a promise to give a contribution at a future time. So it is not like typical accounts receivable, in that accounts receivable is typically tied to earned revenue or a service being provided to the customer. So promise to give is a promise to give a future contribution, and it being a contribution, has a big impact on the revenue recognition and the timing of the revenue recognition, because a promise to give is recognized when promised, not when it's going to be received. So, for example, if in December, your year end is December 31st, you're a nonprofit and you receive a promise to give from a donor that they're going to give you $100,000 in January of the next year. You would need to recognize that as a promise to give and as a contribution in December. And then when it's received in January, you get the cash, you reduce the promise to give, but you don't have any additional revenue or contribution in the next year. So it's kind of, it impacts the timing of your revenues and your cash receipts. And it's very unique to nonprofit organizations. Another thing to note that's different is the net assets. So the net assets are the equity of a nonprofit organization. And then net assets are classified two different ways. They have with donor restrictions and without donor restrictions. And we have additional trainings that will get into more depth on net assets that you can view in the future. Functional expenses. So all nonprofits are required to report on their functional expenses. So the functional expenses is an allocation of expenses into their natural classification, but also across programs and general services. So that is a unique reporting requirement for nonprofit organizations. The other unique thing is a nonprofit could budget for a deficit and still be healthy budgeting of a deficit. And this ties in with the promises to give and the contributions. So due to the timing of cash receipt being different from the revenue recognized, a nonprofit could receive $100,000 in December of a prior year, but know that they're going to get $100,000 the next year, to where the next year they may budget for a deficit because they have $100,000 of cash that they're going to be able to use, but that's not going to be a revenue in that next year because it was already a revenue in the prior year. So this is another unique item that those who work with nonprofit organizations should be aware of. when reviewing budgets and knowing about budgets. And then another key difference is fundraising expenses. So fundraising expenses are those expenses incurred to raise funding and receive contributions. Most, and that's unique to nonprofits in the sense that in a for-profit world, the fundraising is typically to try to get additional equity into the company, but the owners or those purchasing shares and that type of thing have a benefit to them in future distributions of their earnings and those type of things. Whereas in a nonprofit organization, you're fundraising for funds that will remain in the organization or be used for your mission. And so the donors in that sense aren't going to get a benefit directly to them. So just some unique and common differences when comparing a nonprofit organization to a for-profit organization. Okay, and that brings us to the conclusion of this training. So once again, this was just kind of a high level of the nonprofit industry, just some key things to consider. And like I said, also, we'll have some additional trainings that'll get into more depth in some of these areas. If you have any questions on things that we've covered in this training, reach out to us. I've put our website on here. We have a way to for you to reach out to us on our website. We also have our contact information on that website. You can contact me. So thanks again for joining.